I'm sure by now you have some idea about calculating income from business. So we will follow the steps, the usual steps what we have been following. So step 1 is to identify and note down the net profit as per P&L account. So net profit here is 1,25,000. Step 2. Add transactions that reduces net profit. So under this, the first item is in admissible expenses. So these are expenses which are not related to business, not allowed by income tax department, but debited to P&L account. So let's look at the debit side of P&L account. The first one is opening stock. Opening stock, there is an adjustment, but we'll come to that little later. Purchases, purchases is a business related expense and there is no adjustment. Wages is also related to business and there is no adjustment. Salaries, business expense. Bad debts, business expense. Then you also have rent, which is also a business expense, as you would have paid the rent of the shop, rent of the godown, rent of the premises. Interest paid to creditors. So creditors give you goods, and if you don't pay them on time, they are empowered. They have the rights to claim interest for delayed payments. So this is also a business related expense. Now general charges. So let's see if there is any item related to general charges. Okay, so general charges, there are no adjustments. So general charges, general expenses, or sundry expenses are all those business expenses, small receipts, which can't be recorded individually, but they are summarized into one single transaction and recorded in the P&L account as general expenses, general charges, or sundry expenses. So this is also a business expense. Now income tax, you guys are aware that income tax is a direct tax and all direct taxes are inadmissible expenses. So income tax is inadmissible expense. So for reference, you can also write direct taxes. Next. After income tax, we have legal charges, and this transaction legal charges has certain adjustments. So let's see what are the adjustments pertaining to legal charges. So legal charges, here we go. There are two adjustments in this. Let's come to that one by one. 8,000 is the total amount. So let's see what are these. So as per adjustment number 2, legal charges include penalty paid for custom rules violation. So any kind of penalty paid is an inadmissible expense because you pay penalty for not following the law. So any expense incurred for breaking the law can't be allowed, right? So penalty paid obviously will become inadmissible expense. So this will be treated as inadmissible. But we also have some more items pertaining to this. So let's see what are the other items. Legal expense, penalty paid, inadmissible. Then it also says legal expense also includes 500 paid to a chartered accountant for conducting income tax appeal expense. So income tax appeal expense is expressly allowed by income tax department. So this is permitted. So I told you while explaining direct taxes and indirect taxes that all direct taxes are inadmissible expenses. All direct taxes is inadmissible. Second, any expense associated with direct taxes is also inadmissible. So obviously this legal expense of 500 paid to a chartered accountant for conducting income tax appeal is an expense associated with direct tax, no doubt about it. But income tax department has allowed this income tax appeal expense, even though it is associated with a direct tax. It is an expense associated with direct tax, but income tax department has allowed assessees to deduct this expense. Now, what do you mean by income tax appeal and why it is allowed? What is the logic behind allowing this, even though any expense related to direct tax is inadmissible? Now, the reason being is sometimes what happened, the returns what the assessee would have filed, the income tax officer or the assessing officer might seek some sort of clarification. And in case if he's not satisfied with the clarification given by the assessee, right? So he may obviously send notice, and the assessee might not be happy with the judgment of the assessing officer. So when there is a incompatibility between the thought process for interpreting the law, obviously the assessee who has filed the returns has all the privileges to appeal for against the order of income tax officer with higher authorities. So when I say higher authorities, no need to directly go to court. First, you have departments within the income tax department where you can raise your concern about the order of the assessing officer. So you can obviously meet the commissioner of income tax and say that this is the order of the assessing officer which I'm not satisfied. This is what the law says, but our way of interpretation is different. In case if income commissioner of income tax also gives judgment for which the assessee again is not happy, then the assessee can apply for an appeal with income tax appellate tribunal. It is like a mini court within the income tax department. So this appellate tribunal will hear both the parties, the income tax officers and also the assessee. Now, when I say assessee, obviously assessee is not properly equipped who can understand all the laws and regulation, because a common man may find it extremely difficult. So as a result of this, the SSC can seek the help of a chartered accountant who can interpret laws much better and who can also represent the SSC in the income tax appellate tribunal. So whatever the expenses the SSC has spent for this appeal, income tax department says in case if you win the order, if you win the case, you can deduct all this expenses from the profit and loss account. So therefore, even though income tax appeal expense is associated with direct tax, and as per the rule, direct tax is not allowed, any expense associated with direct tax is also not allowed, but this is the only exception. Income tax appeal expenses can be deducted. And this income tax appeal expense of 500 rupees is already included in the legal charges. So is this 500 allowed? The bottom line is yes, it is permitted. Now the third one, 2000 paid to an advocate in connection with prosecution of an employee for smuggling goods from Pakistan. So there is an employee who works in his shop who is involved in smuggling, but this assessee, what he has done, since he's an employee and since he was smuggling goods, right? So somehow to protect that employee, he has appointed a lawyer, and this lawyer has defended the employee in getting a bail. So therefore, assessee has spent 2,000 rupees for this. So is this expense allowed? The answer is apply the same rule what you had applied for transaction number A. Penalty. Why do you pay penalty? When you have violated or when you have not followed or broken the law. So how can you allow an expense which is associated with not following the law? It's inadmissible. So similarly here, smuggling is an illegal act. So when you're defending an employee who's indulged in an illegal act, right, any expense again associated with this is also inadmissible. You can't allow expenses spent on defending illegal things. So this 2000 is also inadmissible, right? So let's add both the amounts now, which is 4,500 plus 2,000 rupees. So in total legal charges, 6,000 rupees is inadmissible. Next, you have insurance on proprietor's life is a personal expense. Proprietor has taken insurance for himself, not for the employees. So this becomes a personal expense. Had he taken insurance for employees, obviously it would have become a business related expense, but this is for his own life. It becomes a personal expense. Next, you have staff welfare expense, which is allowed. I told you on the other day, there's a difference between staff welfare fund and staff welfare expenses. Staff welfare fund is created by the owner of the shop or the assessee by collecting some money from all the employees. So he maintains that fund. Every month he deducts some money from all the employees' salary and a fund is maintained. And in case if there is any emergency, the same fund is used for helping the employee. So income tax department has disallowed it. His income tax department has said you can't create employee welfare fund because there are chances that the owner might misuse that fund, or in case of closure of business, the fund might not be repaid back to the employees. So income tax department says staff welfare fund is inadmissible. But staff welfare expenses are allowed because these are expenses which are spent for the benefit of the employees, right? But again, you have to see whether these expenses are revenue expenses or capital expenditure. So some of these items includes capital expenditure also. So therefore, capital expenditure is inadmissible because it goes to balance sheet. So let's see what are the capital items, capital receipts, which are included as a part of staff welfare expenses. So staff welfare expenses has some capital receipts. If you look at transaction number 4, it says staff welfare expense include 5,000 being cost of water purifier installed for the use by company. So water purifier is purchased. Now water purifier has a life. It runs for 5 years, 10 years. So obviously it's an asset whose benefit can be derived for a longer duration in the purifier. So we will write this staff welfare expense. Cost of water purifier is inadmissible expense. So 5,000 is being spent on this. So this 5,000 becomes inadmissible. So cost of water purifier. But the SSC can claim depreciation on this since it's an asset, but cannot claim the cost because it's a capital expenditure. So as far as depreciation is concerned, we'll come to that later. We'll claim the depreciation little later. Let's see some of the other expenses. Depreciation. Depreciation is 30,000, and this itself will be considered as per IT Act. The reason why this itself will be considered as IT Act, as per IT Act, because there is no depreciation in the adjustment. Usually what used to happen, all the three problems what we have done prior to this, and including the practice problem what you guys did in the last class, it used to say what is the depreciation given in profit and loss account, and parallelly we used to have one more amount in the adjustment stating that this is the depreciation as per IT Act. But here in the adjustment we do not have any transactions that says the right amount of depreciation as per IT Act is so much. So in the absence of information, we assume the depreciation amount which is given in profit and loss account itself is as per IT Act. So no need to do anything. No adjustment is required. No treatment is required for this. Next, you have bad debts reserve, and as you are aware, any kind of reserve and provision is inadmissible for a simple reason that the more you reserves and provisions you create, it will reduce your net profit, therefore reducing the tax liability. Okay, so I think we are done with all except for this, because this had an adjustment, general charges. If you look at, there's an adjustment which says travel expenses worth 6,000 is included in general charges. Okay, so travel expense is included in general charges. Now, for what purpose the SSE has traveled? Is it for his personal recreation, leisure, or is it for the purpose of business? The answer is, it clearly says he went to Sri Lanka for the purpose of promoting business. So this travel expense is also business related. So no need to do anything. This is 6,000 is already included here in the 15,000 amount, and this 6,000 was also spent on business, right? To promote business, he traveled all the way to Sri Lanka. So this is also a business expense. So no need for any kind of treatment. So you just leave it as it is. Okay. So we are done with all the debit items. I think, yes, we have done with all the debit items except for stock, which will come to that a little later. So let's write the next heading. And next heading is admissible incomes. Now what it means, admissible incomes are business incomes which are allowed by income tax department, but assessee has forgotten to record in the credit side of the P&L account. Allowed but not credited to P&L account. So if it's not credited to P&L account, it should be in the adjustments. Now in this question, if you look at the adjustments, there is no adjustment related to unrecorded income. So we do not have any unrecorded incomes. So it's not there technically. Now next, let's write stock adjustments. Over valuation of opening stock. Under valuation of closing stock. So do we have any adjustments on opening stock? The answer is yes. there is an adjustment. So let's look at the adjustment. Here it is, fourth one. Opening stock is valued 10% below cost and closing stock is valued 10% above cost. So when we say below cost, it means undervaluation of opening stock. So do we record undervaluation of opening stock here? The answer is no. We record overvaluation of opening stock here, not undervaluation. Okay. Similarly, the other part of the adjustment says closing stock is valued 10% above cost, which means overvaluation of closing stock. So do we record overvaluation of closing stock here? The answer is no. We record undervaluation of closing stock. So both these transactions will come on the part 3 or step number 3, right? So let's do the totaling. Total of, just write total step 1 and step 2. So we'll come to totaling later. Let's quickly move on to step 3. Oh, step 3 is less transactions increases net profit. So the first transaction under this heading is admissible expenses. These are expenses which are related to business, but it is also allowed by income tax department, but the SSC has not debited to P&L account. Allowed but not debited to P&L account. So where should we find them? If they are not there in P&L account, we should find them in the adjustments. So are there any expenses which are yet to be recorded? The answer is yes, there are. So let's see what are the expenses which needs to be recorded yet. So first one is depreciation on water purifier at 10%. This is not recorded. So let's record it now. So depreciation on water purifier into the cost of water purifier is 5,000. Next, machinery was purchased during the previous year, and on this newly purchased machinery, depreciation is yet to be charged. It was purchased in previous year. So it is given here. Number 3, new machinery worth 50,000 was installed during the previous year on 1st December 2019, and depreciation of 15% is yet to be charged on this. So newly bought machine, depreciation is yet to be charged. And when you look at the date of installation, right, you have to recall the important point pertaining to depreciation, which is stated in the section 32, which says that if the machinery is put to use for less than 180 days, right, you have to charge only half the depreciation or 50% depreciation allowed. Why? Because when you look at the dates 1/12/2019 to 31st March 2020, 20, obviously this will be less than 180 days. Okay, and therefore the rule says if the machine is put to use during the previous year for less than 180 days, then you can charge only 50% of the depreciation. So at 15% into rupees 50,000 is the value of the machinery into half. You can also write 50%. So we are charging half the depreciation because the machinery is used for less than 180 days. So let's calculate the amount. So you get 7,500, of which 50% is allowed. So you get 3,750. Okay, so we have accounted almost all adjustments except for so next heading, inadmissible incomes, which means these are incomes which are not related to business and not allowed by income tax department, but they are credited to P&L account. So look at the P&L account credit side and figure out what are the inadmissible incomes. So these are the items given. Sales, obviously this is a pure business income, and commission received from wholesalers, suppliers for selling the goods, meeting the targets is also associated with sales. So that is also a business income. And interest on savings bank account has nothing to do with business income. It's an income from investment, taxable under the head other sources. So this will become the only inadmissible income available in the P&L account. 20,000. So let's move on to stock adjustment now. In this question, one of the major item is the stock adjustments. So here, under valuation of opening stock, both are there. Under valuation of opening stock, see note 2. So we'll do some notes, and the overvaluation of closing stock, both are there in this question. So let's calculate the amount of undervaluation and overvaluation. So you guys know the formula to calculate under and overvaluation. So let me write down the formula. Undervaluation of stock is equal to amount of stock into 100, sorry, not 100, into percentage of undervaluation divided by 100 minus 100 minus percentage of undervaluation. So what is the amount of stock which is being undervalued? Which stock is being undervalued first of all? So opening stock is valued 10% below cost. So opening stock is undervalued. So what is the value of opening stock? 1,60,000. So 1,60,000 into 10 divided by 100 minus 10. So let's do the calculation. You get 17,777. Let's make it 778. Now note 3, overvaluation of stock. So amount of stock, same, only instead of minus here it will become plus because it's overvaluation. So what is the amount of closing stock which is being overvalued? 1,80,000. So 1,80,000 into 10. Oh, what's the percentage of overvaluation? Same, 10%. So 10 divided by 1. Now we can write 100 plus 10. So like 80,000 to so we get 16,363. So let's write down this amount 17,778 and 16,363. So now we do the totaling. Total of step finally we write taxable income from business is obtained from these three steps: 1 plus 2 minus step 3. Let's do the totaling quickly. We are also running out of time. So have we covered all the adjustments? The answer is yes. We have incorporated all the adjustments. All the items in P&L account is also being accounted for, so there's nothing left out. So let's quickly do the totaling. So you get 1 lakh 500. $58,391. So 1,10,000. $109. So quickly, if you have any questions, please go ahead. Let me unmute you guys first. Okay, please go ahead if you have any questions on this.
So,
Yeah.
Legal charges is 4,500 plus 2,000 is 6,500, sir.
Okay, so totaling error 500 is being missed out. So this will become 1,69,000. Any other questions?
Sir,
Yeah.
what if there's TDS and TCS given? Will they be allowable expenses and incomes or?
TCS and TDS, we have some questions which would be doing because it has certain criteria. So in case if TDS is deducted, then you have to add back the TDS. So we have certain procedure. So we'll discuss some questions on TDS, and TCS we don't allow.
Okay, sir. Thank you, sir.
Yeah. So TDS, the rule is in case if you have deducted TDS on certain payment, then what happens is the TDS which is being deducted should be deposited with income tax department for the assessee to claim it. So there are certain criterias. So we will discuss that criterias. Anyways, we have some question on which there is a TDS as an adjustment. So we'll discuss during that time.
Okay, sir. Thank you, sir.
Yeah. Okay, so if there is no question, then we will wind up the session.